Now we come to current liabilities. Current liabilities are basically those liabilities which have a period or a exhaustion period of less than 1 year or less than one operating cycle. Within that, they have to be liquidated or they have to be paid off. So the examples for it or the items under it are trade payables, accrued expense, deferred income or unearned revenue. Let's look at each of them. Trade payables are basically supplier's credit. You have taken up material, you have taken them up in credit, and you have to pay them maybe in 30 days, 40 days, 3 months, whatever. It is usually and mostly within 1 year you have to pay back. These are trade payables. Then there is accrued expenses. Accrued expenses means expenses that were due in previous terms that you did not pay off. For example, it can be employee arrears. So previous year expenses on employees which you have not incurred, you are going to incur within 1 year period of this year. That is one example. Then it can be deferred taxes. Other examples can be accrued interest payments, accrued warranty costs. So warranties have been claimed but you have not fulfilled them on time. This can be a liability for you, that is accrued warranty costs. So these are certain examples of accrued expenses. Then comes deferred income or unearned revenue. Let's say you have signed a service agreement for your equipment. You have sold an equipment and you have signed a service agreement for the next 5 years. And you have taken the payment right now. This can lead to an unearned revenue because the timings are still there in 5 years, distributed over 5 years, but you have taken the entire payment of the agreement right now. So this will create a liability, a current liability in the form of unearned revenue. Unearned revenue, another example can be someone has subscribed. Let's say you are a domain and hosting seller company. You have sold a domain for 5 years and you have taken the entire payment right now. This can also be an unearned revenue or a subscription for multiple periods, or for one period, whatever the subscription amount is, you have taken in the beginning the entire amount. That also can be an unearned revenue. Another example is, let's say technically your revenue recognition starts when delivery happens. Now, some customer has paid you before the delivery. Okay, delivery means the item has been dispatched from your plant or distribution or dealer or whatever, but the payment has come before the dispatch. That will also become an unearned revenue. So these are some examples of deferred income, and we are through with trade payables, accrued expense and deferred income or unearned revenue. Next we'll move on